Hello, everyone. A warm welcome to all of you. We can see some good old faces. Welcome to this RSP Singh. So I think warm welcome to all to our next interesting take on that relevant topic in the industry. And this is very unique because this time that me or Samir is not presenting, but it's in a set of the new speakers who are coming from our executive program, and they have built up their entire research content and they are going to talk about it. So before that, just a quick intro from our side and we'll just get started. I think we'll not wait because we have a long agenda ahead. So these sessions we are going to take on that mom and pop store, that how do we take care of the financing to them. So this is that entire objective and the team will present. But before that, I'll just quickly, some of you probably know about us. So we are the one of the digital and fintech consulting in BFSI segments, predominantly operating in the BFSI segment, work predominantly with banks, insurance and the wealth companies, as well as the fintech and the wealth tech side of the companies also. Broadly, four service areas that we operate into: the consulting, where that we work on the digital transformation, go to the market strategy, the business models, technology strategies, security and compliance, and a hell lot of services around the digital space. So that's consulting. So partnership, another key service area that many of the solutions provider, next gen solution provider in the tech space may not have the market connect. So we help them into take into the market, where we help them to connect to the market business leaders across the banking domain. Training is another major area for us, where we operate in both the B2C and the B2B space, where we have various programs on the B2C space across all the financial topics, be it on open banking, digital banking, fintech masterclass, and all these things. And we work very deep with the B2B also, where we takes the digital transformation or the fintech courses at the various financial institutions, be it on the banks. And we take lots of such courses at our colleges like TAP, HSBC, SOCGen, and many more that we have taken. And the last we have started is on hiring services. That's more again into the partnership programs. So training, we would have done more than 1,000 hours plus of the classes across the B2B and B2C programs, more than 4,000. So we recently looked at our database and we see that we have almost touched upon 4,000 plus participant that we would have touched across all the different programs. 30 plus odd certification. Almost institutes, as we're talking about, like we have done classes for the NMIMS, IIM Lucknow, and the various other financial institutes that we have taken. Corporate training, HSBC, the SOCGen, and various other institutions that we were taken. And one of the key part that we bring in the training is like we primarily bring it the experience, education experience, and that we teach. And the same we continue to bring that externally speakers from the industry and who comes and take on the various sessions. We last day, apart from that, traditional we used to have 1 or 2 days of the programs, but we launched an executive programs, which is an 4 months kind of extended programs across financial, fintech and the digital banking domain. So fintech, open banking, and financial blockchain. So this program is today's webinar is completely being created and curated by our participants from our first cohorts, which is currently running. So these guys have put in. So just giving a brief to the audience who has attended. So what are these programs that we have taken? So you can look at that kind of the profiles of the people who have attended our programs. I'm only talking about the executive, the long-term program, which runs on the weekends, probably Saturday and Sundays on the alternate Saturdays and Sundays, so that at least professionals, because it's completely been attended by the professional. You can select from the banks, the consulting, other financial services, fintechs, and majority of the participants carry that mid level or the senior management of the profile. Uh, Very big focus around the capstone project. So that's one of the key agendas, that learning through the building the process. So we try to do lots of capstone project of the building the solutions or building the fintechs, and then drive that 130 plus hours of the programs, getting that mentors to take various topics, like say for example, getting BG Mahesh to come and talk about that account aggregator, that how account aggregator is shaping up. So similarly across that, either it could be chief digital officer, chief technology officer, or some of the founders or the co-founders coming and talking about the sessions. We walk into the helping the placement sites, those who are looking for the transition, those who are looking for the job. Widely, our certificates have been well recognized by the industry because of the kind of the credibility that we have built it in the last 4 years. So we have started some of the programs in the 5th of August 2017 itself. So almost like 4 years we completed about this program. These are the broad topics that we covered in the long-term program. So fintechs, getting deeper into the fintechs, getting deeper into digital lending, getting to know about the technology stacks, or the different kind of the business models that we have, be it including the BNPL, you talk about the P2P lending, cash flow lending, and across all the products. Digital banking, that's a core part, that how do you drive the digital transformation within bank or within your organizations. And then various other fintech segments like wealth tech, regtech, and insurtech. Deep into open banking, I can tell you that we were the first to start that open banking masterclass across the world, I can say, when we started somewhere in 2019. So till now, we couldn't see that any deep program on the open banking. So open banking, we take deep sessions where we talk about the banking as a service, different business models arriving on that open banking. Getting deeper into the digital payment, and also how to build about the startup, how to build your fintech, how to create, like from the ideation to the setting up that go to the market, how do you build that programs. And some of the deep technologies is especially on the AIML blockchain, because they are the contributing heavily towards the entire digital transformation. There's just some glimpse of the guys who comes and take that mentorship session. So probably me and Samir takes the part of the sales programs over that 4 month period. But as we are talking about, we getting their mentors like Payu, Prashant coming, KVS Money, and he was the senior most person in the Kotak Mahindra, and getting in his insight that how to drive the digital transformation. Umang Modra coming and talking about that how the fintechs is evolving in the single. So across the different NPCI teams coming and talking about the various business digital payments product that NPCI has launched and how the business models are getting created around that. I spoke about the BG Mahesh, who is a co-founder of Samati. He coming and talking about that how to build that account aggregator, what is it striving into that, how it's going to shape up in the country. Lot more, and across you can see, I'll just leave it for some 30 seconds. You can see that the participants who are coming are deep experience on that, especially they have a kind of an expert on those respective area, and they come and talking about that for each individual topics and giving a good experience. And most of these sessions have been deeply question answer engaged kind of the sessions. So that's all. And why this program has been designed also to help you to transition to the different roles. We know that digital transformation completely transforming the various roles within the organization itself. So this program is definitely, we can say that it helps you to align to get ready for the different roles which is getting generated or curated or is available in the industry. So now I'll not take much of the time. I'll come and so this programs, so currently participants who are going to take the session, they will be talking about this fintech, that how to build a fintech to drive the cash flow lending to Kirana. Okay, so I hand over to Shilpa, and Shilpa, so these are the participants and they will come and introduce. So these guys are currently going through that our EP programs. They will come and talk about the program. So Shilpa, I'm reviewing the share and over to you.
Thank you, Shashank. So I'll just share my screen.
Yes.
And I hope my screen is visible now.
Yes, very much.
But there's nothing on the screen right now. So first of all, I think thank you, Shashank, Maitri, and the entire Digital Fit team. The training that we are actually going through now is really very insightful, and in fact, we must recommend for anybody who is wanting to learn more in this particular area. And coming to the topic of webinar, so this was one of the capstone projects that was given to us, where we had to think of our own business. What is it that we want to start up? How we will be going ahead doing it? And that's what the learning from it, the experience from it, and if I can say a little bit of wisdom that we have gained from doing all of this is what we will try to cover in next 30 to 40 minutes. And so what we'll be doing in the session right now is taking you to the approach that we had taken, what all things we went ahead and we learned that this is how it should be done, it should not be done in some cases. And that is what we'll try to summarize and put it forward. Of course, when you actually go into developing your own fintech or anything, there's a lot more research that is required. But I think within the time frame that we had, I think we really had a lot of learning in the process. And these pointers again could be some of the things which anybody who is starting will be aware about. But still, just to lay the context, I'm just taking through what is it that we intend to cover today. So one is, of course, your base research. Whom are you targeting? So when we also look at the retail sector, retail itself is very Kirana or the retail sector, that itself is a very large market. And then when you go from say city to a tier 2, tier 3, the way they operate, the way they think differs. So again, you have to first know the kind of market that you want to approach. And once you know whom you are going to approach, what is your strategy? Kaise unko hum log reach out karenge? How we want to plan to make them aware of our offering or anything that we are giving. Then once you know whom you want to approach, what strategy you want you to take, then it is also about partnership, because now it is not ki sab kuch hum ko karna, it is not a one man army or one company thing every time. So where you want to go for partnerships, where you want to collaborate, so that the entire ecosystem is leveraged and utilized. So that is, I think, one of the key things whenever anybody is starting fintech, they should be exploring. It is not everything in-house, but the best mix of partnership versus in-house is something to be thought of. And then obviously the solution. So who is your target audience, what you want to give them, who are your partners, how do you bring all of this together. So that is entirely your solution part of it. And this again, like we try to so as part of our capstone project, we also try to demonstrate that user journey, that how a user might start and what all stages he might have to go through. So that is again we explored in our project. And then finally, the revenue and cost. And why this is important is, as a fintech, you may start, you may put in your own money, but unless the roadmap is clear that how my revenues are going to generate year on year basis, how I'm going to keep a control on my cost, what are the components of cost. So once all these things are clear, then I think the homework that is done to get started, becomes, much more easier. And it is very good to, a good starting point to get into your business idea or whatever you're looking at. So with this, I'll actually hand over to Raghu. So each of these, all of us, the team members will take you through all of these things. And, just before Raghu starts, a quick introduction about myself. I forgot to give that initially. So I am Shilpa. I work with Iris Businesses as a product head. So essentially looking at the GST set of products. So over to you, Raghu.
Hey, yeah, maybe if you can move to the next slide, Shilpa, maybe I would invite Hardesh to come in and then give us a little bit of overview, then we will jump into detail about the fintech.
Hi folks, Hardesh under this side, and currently I am working as a profit center head in Reliance Jio Infocom Limited in one of the locations based in MPCG circuit. So through this slide, I will give you some synopsis of what exactly is happening in the Indian retail segment. So if we currently talk about today retail scenario, the total market size is around $880 billion, and it is expected that it will grow to a level of around $1.3 trillion by year 2025. Now, out of this, around $608 billion is the grocery market size, and even if in this segment also around 78 to 80% of the market is fed by these small Kirana stores, very small format stores, Kirana stores or mom and pop stores, which are almost 12 million across India. So another 15 to 18% of the market is fed by large format stores like Big Bazaar is there, Spencer's is there, D-Mart is there. It's like that. So if it and another 4 to 5% of the market is fed, grocery market or FMCG is fed by our e-commerce platform like Flipkart is there, Amazon is there, or this Big Basket is there. It is like this. So if we talk about today, the current e-commerce size currently in India, it is almost $30 billion, and it is expected that this market, it will grow to a size of almost $200 billion by 2026. And if we talk about this segment, this FMCG segment, or this grocery segment, it is contributing to almost 10% of Indian GDP, and it is providing almost 8% of direct or indirect employment to Indian population. So over to you, Raghu. This is all brief synopsis about Indian FMCG area.
Hey, thanks, Rajesh. Maybe Shilpa, if you can move to the next one. So first of all, let me introduce myself. My name is Raghuram. I'm part of American Express. I work in American Express and I'm part of the consulting team. Hardesh actually gave us a good overview about the landscape around the retail and the Kirana ecosystem. But now it's very important to understand what are the three unique things about Kiranas. Uh, so actually, if you look at Kirana stores, they are in terms of the cash flow, they are driven by cash and carry business when the transaction takes place between a customer and the retail store and the Kirana store basically. But what it actually does is they also have a limited footprint on the lending products because of no formal access to the lending products on the credit bureau system, right? So which makes the banking ecosystem to actually evaluate and give them any a lending solution like any large enterprise or even a medium-sized enterprise which has at least some footprint on the credit bureau and a couple of more other data points. And then the second factor here, if you look at in terms of the Kirana ecosystem, the distributors do offer them in the range of 15 to 30 days credit. In some cases, it could be even be lesser. But based on what we have understood when we connected with a couple of them, this is the range that it looks like in terms of, and this acts as a short-term lending. While they are, on the cash and carry business, they have high inflow of cash, and some of the characteristics of Kirana stores varies depending upon which location they are based. If they are in city, if they are in rural, some of them operate on credit because they are very well connected to the customers who are in and around that, let's say 1 kilometer or 2 kilometer radius and stuff. And what's really an important thing for Kirana and why do they actually look for lending is basically their aspirational growth. So a guy having, let's say, about 400 square feet shop would want to become a standalone modern trade sort of setup, and for that he definitely needs some sort of lending, some sort of or increase more products in his range of offering. So that is one of the reasons why they would look for an additional. So, and what do they really depend on right now is that either they go to a loan shark or some of them use properties or some of their assets as collateral in terms of raising the lending requirement. So that's in a nutshell about Kirana's problem that we are trying to solve. So now I would like to hand it over to Anand to give us a walkthrough in terms of the ecosystem.
Yeah, hello everyone. I'm Anand Parashar. I'm part of Lemon Huddle team. Our company is basically into designing GTM and sales partnership for B2B. Yes. So very thanks Hardesh, Raghu, and Shilpa for the wonderful hands of for the why part of it. Why retail segment we have identified. Nothing to talk much because huge numbers are there, and every layman also know there's a huge spread of retail houses. We used to listen a lot of things like global and global fund is coming to retail and all those. That is for the layer. That's for the topmost layer, which is online trade or you can say modern trade. But still, 70% of the part, which is core retail, it is unserved, which is not being treated like higher valued. So we what have kind of done that we have identified the segment which should be served with the mechanism of a deeper thought process, understanding, and lock in relationship. And then we design some underwriting models to go to them and in cash monetize for the lending benefits. So if we talk about the model, it is basically we can see it as a software as a platform model with four what you call you can say four stroke engine kind of thing, wherein every part of it is getting some value from stroke and creating momentum back for the running engine. If you consider what is the benefit or value lender is generating, who is the lender? Lender are the NBFC.
Did we lose Anand?
I think so, but let me take over. So actually here, what we yeah, so
you carry on.
Yeah, okay, thank you so much. So what we are trying to actually convey here is, if you look at it, requires multiple partners to come together and then make this offering possible, right? So one side you obviously need sorry, someone's yeah, so one side you obviously need the program partners who will enable data, and then on the other side is the lender who will enable the financial requirement. And then you also have the data and API providers for us to, let's say, if we have to do a alternate data underwriting, we'll take an example. If you have to, let's say, use the internet usage or the mobile bill usage, or some sort of I mean, this is just an example. So let's say if you have to use their bank statement reading, and then if you have to use GST, if they are participating on the GST, right? If they meet above certain revenue threshold, obviously you will see their data on the GST side, and on the other side is the borrower. So we be the platform. So basically, in the sense, any fintech operating like a flat platform who brings the lenders, the program partners, and the data provider together, so that it becomes seamless in terms of be it the product construct or the solution construct, to make it accessible for the borrower. So this also enables a lot more other activities, which we will see in the next slide. So where we will talk about our building blocks in more detailed construct. But to give you a perspective, it requires ecosystem of partners to come together to make any lending solution possible. Yeah. So with this, we can move on, and the next slide is Anand back.
Yeah, here, Raghu.
Okay, yeah, go on.
Thanks, Raghu, for handling that. So this part is what part we have discussed, and how what we are taking to the ground, and for whom we are taking, and how, what will be the channel, and what will be the how approach for the to taking the product to the ground. Our product is a single unsecured unsecured lending with line of credit mapped to it, and line of credit will be virtually designed, which will be helping us to customize the solution for individual retail. Suppose down the line we need to upgrade the retailer for next credit limit, or we need to add on another line of credit, so that soft part, a virtual part, is there in our product. And if you go to the second part, it is targeted segment. Targeted segment is purely Kirana store as of now, and who are irrespective of the geography, irrespective of tier 1, tier 2 cities. The filter here will be based on underwriting only. So further down the line, we may expand Kirana to medical or hardware or any kind of flavor we can add into it. That part of it is its channel, how we are reaching out to the customer. Basically, we want to be purely digital. Unfortunately, at stage 1, no one at this stage in India can't be a purely digital company in terms of lending. So we will be following the same. We will start up as a partial digital company, wherein we will try to incorporate most of the digital touch points. And for a physical point, we will be monetizing on our partnership strength, like we'll be partnering with distributors or whosoever our partner will be monetizing those strengths. So with this, I think I'll hand over to the next.
Yeah, thanks, Anand. Yeah, good evening, everyone, and thank you for being here. I'm Sandeep, and I'm a specialist in transaction banking, currently working with ICICI Bank. Now, we have seen that largely the Kirana community has been kind of having a broken banking experience. With most of them don't even have a formal banking arrangement. So we have kept 2-3 objectives in mind to build the blocks for the ecosystem to build this for Kiranas. One of them is we wanted to empower the retail segment by providing a seamless credit facility so that we can partner them in their growth. Second is that to do this, we also wanted to, this is going to be a cash flow lending model, which is going to be unsecured. So we wanted to establish a data-driven credit strategy. And thirdly, a robust collection model, which is going to be iterative in nature. So with these objectives in mind, we have built 3 blocks. And first is the sourcing. This is largely going to be kind of a closed loop sourcing model. It's not going to be open for all sourcing. Reason being that we wanted to source leads from those entities who understand the market and the retailers extremely well. So those are the wholesalers, supermarket distributors, the SaaS platforms. So they understand the entities extremely well. Second is the fintech stack. That is what we propose. So here, what we are going to be doing is based on the leads, we'll be doing a soft kind of a credit check on very, very basic, extremely basic data like a GST or a PAN number, which will pre-qualify the Kiranas or the retailers for the loan. There will be a documentation collection, which will be evaluated. Post you qualify for the loan, we will run past a underwriting engine through an application management, which will consist of underwriting engine and a decisioning and then disbursement. And after disbursement, there is a collection engine. So we will discuss many of these aspects in the coming slides. A third is the Kirana service stack, which largely consists of application completion. Now, we are all aware that the Kiranas are not that tech savvy. So while we want to establish a digital footprint in the entire process, but we will also be having a physical enabler for them so that follow-ups are there to guide them exactly how to do the application process. Post which there will be documentation submission and the digital self-service. So this is going to be an app-based digital service because we observed that around more than 80% are using smartphones. So currently they are using largely this khata where they write down all the debit credit entries and so we'll be establishing that in their iPhone, in their smartphones, so that they can do many of these functions like order management, inventory management, account management, and even the payment gateways online. We will also be, and all this will be connected through an API connector through the loan management system, where we will have the partner banks who will be funding the underwriting process, the disbursable loan process, also the credit bureau, the KYC documentation validation, and the partner products. So we also find like we will be tying up with some third-party partner products. We felt that, for example, this segment is very largely underinsured in terms of health and life insurance. So we will be partnering them in their through an API connector. So with this, I would like to hand over to Partha, who will take you through the credit evaluation and underwriting.
Okay, thank you so much, Sandeep. Great. So now, folks, myself is Partha Sengupta, and I'm like more than 2 decades. I've been into banking and financial services. At this point of time, I work as a managing partner for Trust Plutus Wealth Services. Okay, so quickly coming back to the subject and how we will be taking the entire credit underwriting process. Now, the objective is very simple, and it's a twofold objective. We want one, the customer to succeed. Number two, we want the NPAs to be minimal. So these are the twofold approach which we have towards the credit evaluation process. Now, this is the first slide, which basically sums up everything, which talks about what we are going to do from initial screening to the final decisioning. First of it will be the pre-qualification, and in this pre-qualification what we will actually do is that we will gather the initial information, which would include the KYC, the GST data, the credit bureau report, uh, uh, and we will have a score-based approach towards each and every customer. In the second stage, what we will do is that we will create a credit policy, and this credit policy will be in alignment with the partner bank with predefined risk parameters through the detailed external and internal data analysis. And the third and the last step will be the decisioning, and this decisioning will be completely on the hands of the bank. However, the derived data which we will have through the credit score and the credit underwriting policy, we will push the partner bank for the account of approval. Now let's move to the next slide. Okay, so our credit evaluation and underwriting are based on 4 pillars. The 4 pillars, out of these 4 pillars, the first pillar is probability of default. Now, when I say probability of default, it is nothing but what is the likelihood of the customer to default in next few months. Now, typically, how do you understand that? If you take a report from credit bureau, his score might be XYZ, whatever, but what we have seen over last few months or about a year and a half, while your credit score might be fine, but it is slightly dated. So for that, what we have to do is that we have to take the alternate data. And when I say alternate data, I mean, maybe we study the SMSs that he has been receiving, or the WhatsApp messages. This will clearly determine that whether this client is now taking more loan, or has he been defaulting for last 2-3 years, or is he not paying on time for last 2-3 months. So that will give me a current picture. So that is the pillar number 1, which is the probability of default. Pillar number 2 is through the cycle. Now, through the cycle is what we mean, and we have learned it over last 1 year, is the increase of customer default during the economic downturn. Now, I just take an example. Kirana shops, and as an industry, if we look at it, there are markets.
Arthur, sorry, are we allowed to ask questions while in the community, while you are in your flow, or should we wait till the end?
So Rohit, we'll just complete this slide and then we'll pick it up few questions. Yeah.
All right.
Yeah. Thanks, Rohit.
Yeah. So this is so through the cycle. So this is increased default during the economic downturn. Now, as I was saying that typically if I look at Kirana as an industry or as a particular sector, there are markets which are typically driven by tourism, and because of tourism, effectively the Kirana as an industry was very, very high, or pretty dominant in some of the cities. But today, if you look at it, because tourism as an industry has taken a hit, those are the places Kirana shops are also bleeding, literally. So this is also as another point which we will take into consideration. The third pillar, which is we say that loss giving default, it simply means that the amount that the customer might take away in the event of default. And the last pillar, which is the return on asset, it is that what is the kind of profitability we are expecting from this particular customer segment. Now, once we have determined these 4 pillars of credit underwriting, I will urge you guys to look at the right hand bottom side of this slide, where we have a table, where we have an Excel table, which basically talks about the risk to revenue. Now, out of the 4 pillars, what we do now is that we determine the underwriting policy. And if I have to simply say, a underwriting policy is nothing but your approval process plus the credit limit that you are giving to your customer. That is the underwriting policy that we will determine. Now, how we will determine it is determined through a risk revenue parameter. Now, on this particular box, if you see, the one which is going horizontally is the revenue line, and the one which is coming vertically is the risk. So what we have decided, that when we are a startup and initially we will move on, we will probably like to operate in the top left 3 boxes, where we are operating with a higher revenue, low risk kind of a client segment. Later on in the phase 2, we might like to explore to the next level of customer, where the revenue will be high and the risk will be moderate. Now, it is interestingly, if you look at it, that how do we determine it? To quickly say this, that if you typically look at a credit bureau report, or if you typically differentiate the client segment based on their credit behaviors, you will see there are 4 kinds of clients. One is new to credit, one is subprime, another is prime, and another is super prime. Now, typically a new to credit will have the lowest score, and the super prime will have the highest score. Now, new to credit will have a lowest score because they are new to credit and they do not have a credit history. Now, when you look at a super prime client, now typically, are these clients the most profitable? The answer to it is no, because their behaviors are the best, and what they typically look at is the best of pricing. At the same time, when you look at something like a new to credit client, are they the worst client because their credit rating is low? Possibly the answer to it is no. They are not yet inducted to the credit business, but what you can generate out of them is a higher revenue. So it's a mix basically that we have to operate out of it. And based on the several data points and the alternate data that we will derive, we will come to a scoring band, and we will try to operate, as I have mentioned, in the top 3 boxes at this point of time in phase 1. Now, I will also talk about a little bit on the product construct of ours. What we will do is that we will take a last 1 year average monthly cash inflow of that Kirana shop. What we will give them is a 40% of average cash inflow as a line of credit. But at the same time, we would like to keep a caveat in it. We will see that the total exposure of loan that the person has taken and my loan put together should not exceed more than 60% of his cash inflow. So these are the 3 broad parameters of parameters we will follow when we will do the product construct.
So maybe Partha, now this is a good time. So we'll pick up few questions before we just proceeding. So Rohit, I'll come back. Raktim, you had initially asked for that.
Yeah.
So we'll just go ahead with
Shashank,
and Rohit. Yeah.
Shashank, you are able to hear me?
Yes, we can hear you.
Yeah, this is Raktim. I'm working in Infosys Finacle from 1995, part of the Finacle product group. So I have 2 questions which sort of are related. One is in India, it's a very heterogeneous market with various languages getting spoken by the Kirana stores. Not everybody is in English, and many time in the Kirana stores, it's like Hindi, Malayalam, everything. How you are planning to crack that? And second thing is, sometime back also I attended one of the digital fintech class, and that time one person came, I think it was from Phone Pay or somebody, what they told, and maybe you can consider in your model also, what they said, they have provided a QR code to this Kirana guys. So whenever somebody, any customer pays, it scans through the QR code. By that way, they come to know how much really sale is happening, because because you just now you talked of, you'll take last 1 year data which can be fudged, which may not be complete, or there can be, may not be up to date accuracy. What he was providing the idea, I don't know whether it really got implemented or no, that you know, they have supplied free QR code, all their customer pays through that QR code, so you really know how much business is happening in that Kirana guy. And then you can apply all your formulas based on whatever 40%, 60% you want to give. So if I not try to relate all the things, what I'm trying to say, it's a heterogeneous market. People will not be having some data because of the India stack, GST has come, but how do you want to reutilize that data? Because if you're starting from scratch, already players will be there. And have you looked at anything like QR code and anything utilizing from the India stack into this model? So yeah, this is my thing. Thanks, Shashank, for giving me the.
Okay,
yeah, I'll go for it. I'll take these questions. So first of all, thank you so much. Actually, you know, these are some of the thoughts that we had initially. If you look at it in terms of the language diversity, I think I think every 300 kilometers you'll at least in the sound that you find a different spoken language, right? But largely, if you look at it, I think to start off, I guess it would go with what's majoritarily used, right? Let's say English and Hindi, and then slowly you will transition into as you expand to other markets. So we start off with, you know, what's the you know, targetable space that we want to look at, right? I mean, when I say we, it's not us. I guess for any fintech for that matter, they also would have started at one city, understanding that city, understanding that behavior, and then slowly transition into multiple cities. So it's not a program that's going to get that anyone should launch like as a blanket for all markets. But transition slowly or maybe, you know, open up into other segments. So that's how you would overcome. And then second, in terms of your data question, this is going to be a closed loop, right? So it's not just one source of information, it's multiple source of information, and it will be continuous information. So it is not just like, you know, you take now and then, you know, you lend, and then you don't know what's happening. So some of the points that we looked at, or what we've understood what should really go in, if anyone, you know, looking at, is obviously you look at a closed loop. Let's say you go to, you know, I'll take HUL as an example, and you target that particular network. Within that network, I think, you know, the data that comes out of the distributor, or, you know, your other or from the brand itself, right? So that is what you would leverage, one. And then two, you would obviously, you know, try to see, as part of the data partnership that we talked about, if we can get, let's say if that guy is about 20 lakh or 25 lakh, I guess we would be able to get some of the data through the GST as well, right? So obviously it will require some sort of an approval and authentication. So that is one. And then and the payment partners, of course. So if like, we haven't thought through from a QR code perspective, because they are more from a P2P or a P2M sort of payment setup, and they are you know, likely to move into the lending space as well. But here the case is going to be more of a closed loop, which means that you are doing one specific let's say type of deal. That's how it's looked at. So I mean, that's obviously is a good way to look at it. Maybe if we can talk to NPCI or someone, if they can enable the UPI data based on his authorization, then obviously you will have the visibility. But again, that doesn't fully solve for it, because because, you know, I think in some of the places using a QR code, or in cities it's done, but in rural areas what we want given to understand is still cash. And some of them like offer credit, let's say 30 days, on the day of salary they come and repay. so that's how it's done. So these are some of the use cases that has to get ironed out as you move forward, understand that particular market, and it's going to be a step-by-step approach.
Thanks, Raghu. I think we need to move faster. So we'll pick up. So Rohit, you wanted. So Hitesh and Ramakrishna, I know that you have already lined up the question. So I'll come back. So Rohit, you may go ahead with your question.
Thanks, Shashank, and hey, thank you for sharing your knowledge today. I had a couple of questions on, the space that we are discussing today. You are trying to solve for. This problem statement has many people trying to solve it. So I was wanting to know, what are the few insights you have in retailer behavior, Kirana mom and pop store behavior, that you think will help you either engage them better or underwrite them better? Because if you're talking about data dark, Kirana, then he's neither on IT nor on GST. If he were on GST, then the world can lend to them starting from HDFC Bank, right? So, and their distribution will beat us any day. So just wanting to understand, when you're trying to find your product market fit, when you're trying to find the few insights, what do you think you figured out which will help you? That was my question.
Okay, so Rohit, I'll take a shot at that, and then maybe I'll invite my other team members also to jump in. So actually, when we did this entire presentation, we were like really very excited. Oh, we've kind of understood. We are, trying to do solutioning around the Kirana store, following the same set of frameworks. But actually, when we presented to one of the external guy who's doing this, right, and so most of our learning on this deck has come from him. When we actually presented, so the first insight that we got, not everyone will come on to you on a digital platform. So basically, if we were fully saying that, okay, everything should be digital, you do an API here, you do an API there, you bring in the KYC, you run the RegTech validation, you send through API and stuff, but how do you onboard really? So some of them will require some of the face-to-face interaction that requires you to bring them on board. And two, our second insight obviously came from let's say from the cash and carry side of it, because you really don't see that unless it's coming into, let's say, either a card network or the UPI or some of those, right? Unless it hits that network, you don't see the data because everything is cash. So one way to know is to see how much deposits he's doing on the bank account and what is the frequency of it. Maybe that is one way to gauge it. And our majority of the data per se is going to come from the, let's say, the person who's supplying, right? So that is where we are saying that we need to, have a close look at what's the type of sale that they are doing, what's the type of this thing. But otherwise, obviously I take your point that if they are on GST, I'm sure the larger banks will actually, will be able to, with their network reach, will be able to take over. But yeah, so these are some of the insights that we got. Maybe I'll invite my other team members to.
Yeah. So Rohit, I'll just add on to what Raghu said. You're very right, and thank you for putting it up. The other big element in the entire construct of the business when we did it, designed this business, was that the predominantly the leads will be flowing from the wholesalers to us. So we will be actually sitting on the wholesalers. And if you have noticed, the slide before me, we have already spoken about that model. So that typically gives me a lot of comfort in terms of deriving the data, because if you look at a typical wholesale retailer behavior model and the way they have behaved with the wholesaler, that clearly gives me a kind of data point to derive his financial behavior with them. So it is, as you have mentioned, I completely agree that if they would have been in GST, then things would have been different. But yes, so to answer your question, one of the points which I just wanted to add from what Raghu said, that we will be sitting on the top of the wholesaler and the lead generator will be primarily the wholesalers. for us. So the data points will be coming from the behavioral pattern between the retailer and the wholesaler.
Yeah. Thanks, Partha. So, Hitesh, Dhromil, I'll come back to questions. Let the team complete their few more pointers to cover. So, Raghu, if you request, in keeping the time check in the mind, next 5 minutes, if we can complete and then come back for pickups, few more questions. I'm sure it's pretty interesting and people may stay back. So, Hitesh and Dhromil, just stay back with us and yeah.
So Shashank, do you recommend that we summarize? So we have we just want to demonstrate a quick flow in terms of what the flow of the onboarding journey would look like. So which I think Shilpa is going to show us.
Yeah. So and also just to add to one point which we're discussing, another learning was that Kirana's, you also need to know who are actually looking for growth. So the aspiration to growth, in terms of the behavior of, if I can say, the shopkeeper also plays an important role when you look at, deciding whether or not to lead. So that was one, I will say, thing which we also learned when we were discussing this whole thing. And I'll quickly move on because keeping in mind the time, I'll just quickly move on to next. So overall, what we have seen so far is, what we wanted to do as part of credit underwriting, what is the market, who are my partners. Now putting all this together as a solution. So that is what we are thinking, that how this journey can be actually displayed. And here is one learning which I think Raghu already mentioned was, it cannot be a fully digital, I would not say could not be, but initially at least it should not be a fully digital experience, because again I think one of I think that we always already pointed out that in the remote areas you may need more of help for for the shopkeeper to onboard and all. So a physical touch point is required. So that is how we were also thinking the overall customer journey can be. So here is just demonstrating a few pieces of it, that when it is to be started, one, of course you have to reach your target audience. Now there are various modes by which you can reach the target audience. For when we explored this, we were looking at a closed loop program, hence the start point was different. But overall, do you want to reach through because now WhatsApp business is also gaining pace, so you choose the channel that you want to communicate to your vendors, and maybe some of the activities also later on can be done via these channels. And why WhatsApp we are just mentioning here is because that is one of the most common things which everybody uses. Kirana wale ko aur shayad kuch app pata ho na ho, at least using WhatsApp and all, everybody is like pro of it. So leveraging what is available and people are using, that is one thing definitely to be considered. And then I think one of the next biggest part, which finally determines how much applications and how much you'll be able to support your customers, is how the whole data part comes to you. So one is, if they are, like even we talked about, if somebody is already registered with GST, yes, you can get the data, but the process of getting the data, the OTP flow and all is still a challenge to address. So, that is one thing to be taken care of. And apart from GST, there are other products and everything that the Kirana shop is owning. So like we have just taken example of, Khata books. So if they have already something, how the data comes in. So all those connectors have to be built, and it has to be done in a manner that, okay, even as a shop, as a person, as a shopkeeper, sitting wherever, I can operate it. Here, that localization of language and all also comes into picture. How much of help you are able to do, the intuitive interfaces to be given. So some of that will again be a key determiner, a key success factor for the solution. And of course, once you have, so these two are like kind of one-time activities. You let them download it, let them get all the connections in place. Subsequently, how frequently you are able to engage with the with your user also determines how many more users you'll be able to attract. Because once a month koi aake dekh raha hai, then it doesn't have those many touch points with your application. So what are the more things you can just keep on giving to your users, be it more of information or cross-selling, like insurance was one thing we mentioned. So the more touch points you have with your users, the more frequently they are able to interact with your application, the more scalability and more reach is what I think can be gained when we look at the overall customer journey. And so this is just again a detailed journey. I'll not go through it, but overall explains, we start with letting the user sign up, and finally the data, we get the data, we underwrite it and are able to define what is the credit line, how much amount we are able to give as part of the continuous credit line. And in this, at various points, we will need also from, so this is the front end for the user, but at the back end, the application, the fintech also has to connect and manage the different programs and different partners, be it the bank who are finally going to take the loan on their hands, or be it the KYC, anything that is required at different points, you need to integrate with the partner. So this is not everything done, or this everything done by the fintech, but you have to figure out what are your strengths, what are your strengths of the partners, and then accordingly design the customer journey. So and again, when we look at the overall solution, so what I have highlighted here will be part of the loan management system, which is a continuous thing, whereas the other sections would be part of loan origination system. So those all, I think, mapping and what does fit in this, I think is an important exercise which has to be done, so that everybody is clear what is completely under our control and where we need, which could also mean additional cost because you're integrating with the third parties. And just to summarize the learning, so when we were also defining the program, so what we have learned in this is, while aspiration is to go to completely digital, there will be certain physical touch points that is required, because this will ensure that Kirana Fell also knows you well and the onboarding journey has been done. Then input versus validation. So here essentially how much you want your user to fill in the data of their own, versus if you can just pull out from some other sources, but let the user confirm. This process could be a better one, because if you just let yourself derive, then the data quality issues could come up at later stages when you want to analyze this data and run some programs or any references out of it. Then this one which we have already discussed, in-house versus third party, how much you want to do internally, whereas where all you want to do integration. So these mix, what I've shown here, this is what we finally think could work well. But of course, depending on what is what the fintech is looking for the segment, what kind of journey the fintech is looking at, this mix could be different. But you have to see it aligns to your internal goal and whatever the plan you're thinking of. So I think I had recently read somewhere, not MVP, which is a minimal viable product, but see if you can go for MLP, that is lovable product, because this market, again, what we are looking at it, there are many players, and there will be other banks and all also who could be offering or targeting this particular segment. But now there is a need to make something which once your users are get hooked to the Kirana shops are hooked to, then the further increase and things are guaranteed. I'm sorry, I think someone had wanted to speak in between, but I just did not let myself stop. So
no,
yeah, it was me actually. I wanted to summarize it, but you've already done that.
Raghu, just before that, friend, so we have put in a feedback form in the chat. Please take just a few seconds and give your valuable feedback. And also, this entire the model that the team has worked out. We'll share that presentation once you have filled up the feedback form. So those who fill up the feedback form will share this entire that fintech model that the team has created with you guys. So over to you, Raghu, and we can just quickly summarize and then pick up the questions.
Yeah, no, I was just saying that. I was anyway going to summarize. So which I think Shilpa has already done in terms of the approach, in terms of what your product or solution strategy should look like. But there are a couple of more slides here, but we are not going to go through. So maybe we can summarize, keeping up. So Shilpa, if you can just quickly move on to the, last slide. So basically, this is to give you a perspective on what the revenue generated would look like, and then what's the credit usage, and your capex and your other controllable cost. So anyway, so we can move on. So one of the things that we closely looked at when we evaluated this is Shilpa, sorry, can you move on to the next slide, please? Yeah. So one of the things that we closely looked at is keeping the NPA at the lower minimum level. Let's say, how do we start and how do we understand this? So that's why our proposal was to look at a closed loop, where it gives you more control in the program in terms of how by doing a direct pull of the invoice, and then you're verifying the order. Everything is happening between you and the distributor before or the dealer. So then it gives you the opportunity also to evaluate some of the spend limits, spend requirements and stuff. And then post spend, I think today we all have the e-NASH and auto debit. So the collection was one of the very critical part. Unfortunately, we are not able to spend time on this, but otherwise this was one of the area that we specifically looked at, because depending upon the location of the store, it can always be a challenging task in case if there are any default to require. Yeah, so that's about it, Shashank. I'll hand it back to you. Maybe.
Thanks, Raghu, and amazing work, team. Amazing work. So, guys, this was in a fintech model that's been completely created by participants from the first executive program cohort. Just for your information, we'll be starting that next executive program cohort from September. This entire the fintech model that our team has created for the cash flow funding for that Kirana store. We'll share the deck. Please share feedback form. Matri has released the feedback form in the chat box. Now we'll pick up the question. So Hitesh, sorry to keep you waiting. We'll pick up. Go ahead with your question. And Ramakrishnan will come and Dhurmil will come back. So Hitesh, please go ahead.
Sure. Thank you, Sameer. So I did also attend your program, and this was something similar. We also had put as a capstone project, so very close to my heart. But really amazing job. Quickly, I'll ask just a few things. One is that, a fintech will probably have to have a lot of leg work to be done to acquire these kiranas. What is your insight on the fact that are Kirana stores willing to pay the credit, the interest? Because for now they get the goods for free. I mean, in the sense that they don't have to pay for interest for the credit period. When they're enrolled here, they will have to. And the third part would be collection. I mean, what is the recourse if there is a sort of default? And how are the limits kind of being assigned?
Okay, so no, Karim. Yeah.
Okay, so sorry, there were like a lot of questions. Hitesh, let me answer the first one. So in terms of the interest rate, right? So the way that we are looking at this program is that the distributor is able to pay, or in case if it's an extended credit, then a retailer will be able to pay. The reason why we are saying that in Kirana store that we are trying to target is because when the distributor or the other the CNF or someone, if they go and buy from the brands, they have to pay on cash and carry, right? So they always run on a little bit of credit, but they always have cash and carry type of setup, right? But he has to provide that back as a credit to the retailer. So there is obviously, some bit of gap there. So, looking at what is the comfort and how many days that he can look at is where he would pick up. And if anything that goes above that, and if it's an extended, then it's going to be the retailer. So that's how it will work, depending upon the program that you would set up. So that's the first question. Sorry, and the second question you had was, sorry, I missed that. Last question I know about collection, but second question you had one more.
The second collection was majorly that there will be motivation for the retailers to come up because they were getting free credit. That was the part. I mean, the distributor at this currently is not charging them any interest. When they enroll in this program, they will have to pay interest.
Yeah. So the other thing also, once he comes on, he'll also be on the formal lending ecosystem as well, right? And that'll start to show up. And so the motivation is obviously like if he wants the aspiration that we talked about, right? So if they want to grow and if they want to, like, let's say move into let's say from a small store to a big store, and we've seen some of the retailers around have grown as well. So in that scenario, obviously there will be some cost to that funding, but otherwise, it's depending upon how the deal is structured.
Thanks, Raghu.
Thank you.
Shilpa, if you can remove that share. So, jump to the next question. Raghu, I'll just try to pick up your thought, or you or Anand, anybody, like how your experience has been around this executive program and then working on this as a part of this executive program and putting up this webinar.
So, if you
Anand,
I'll give you, I'll not allow you to call it as an education program. Let's call it as an experience program.
Thank you.
Whether you want to expand your domain, or you want to experience new domain, or you want to change your career path, or you want to build your own image inside the organization, I would strongly recommend this program. It's a kind of experience, because you are not only learning from the teachers, we are learning from the experts in the industry. And probably it will not be wrong, because the batch itself is a huge amount of content inside and experience. So that kind of, it's like me putting into a school, a room wherein a lot of content is roaming around, and I just want to catch how much I can catch it. It's a time bound experience, and it's in terms of value. I've also written something on the LinkedIn also. Return on investment. If you calculate return on investment versus your investment in monetary terms, it's like I'm investing 1, 2, 3 lakhs, and I'm probably developing myself a value proposition which is sellable to some multiples of lakhs. Or if I see my ROI in terms of repositioning, so probably I will be able to reposition myself in a different tangent of a class of people who have thicker content in the modern tech world. If I consider ROI in terms of in terms of value, like getting promoted, getting a space in my top management's eyeball, so I'll consider I'll be in terms of top 1 or 2% of the guys who will be seen like consultant and a problem solver in the organization, especially in terms of not only in the finance domain, but it's technology is technology. It's digital transformation. The flavor is same everywhere. We are talking about finance and technology. If we depart technology part of it, I can plug it in anywhere, whether it's in education, it is in healthcare, anywhere. It is good that we are into the plug, which is more booming. So this is, I think, it is a combination. I think I should reframe it. It is an experience. It is a costly experience, which is at a low cost level, I think. So thanks the fintech, thanks the team, and thanks the digital.
So, Shashank, I just want to comment now. I just want to add one point here. So, it's quite, how do I say? So the person who asked this question just a while ago, so we both actually did the same project, in the earlier session. So that is Hitesh, right? So I didn't realize that it was him. But Hitesh, nice to meet you again, and I'm glad that we are still curious about the same set of questions that we had, and I hope we were able to answer some of those questions that you sort of raised just now.
Yes.
And coming to the
thank you. Very nice connecting again.
Yeah. So, Shashank, some of the stuff I think about our experience in terms of learning this about is that it has given a framework in terms of, how do we think, right? What will your operating model look like? What will your revenue model look like? What is the, let's say, business model look like, either partnership? I think those sort of structure is really critical when it comes to, when you actually want to look at and explore something that you want to do on your own, right? So that's one of the reasons that why we also go in deeper into the business models and the revenue models and stuff. But overall, I mean, majority of stuff Anand has already called out. Yeah, so that's been my learning experience as well. Yeah, thank you.
Thanks, Raghu. I think so we'll pick up again. I know we have extended the time, but since some of these insights, questions coming very interesting. So Drumil, you have raised your hand. Please go ahead with your question.
Yeah, sure. Am I audible?
Yeah, Drumil, very much.
Okay, great. Thanks for providing me an opportunity to present this question here. I work in RBL Bank and head the Bharat Transformation Initiative here from technology perspective. So I just wanted to think about it. I was as I was hearing the presentation, one of the sentences that struck to me was that we are going to rely on wholesalers to pass us the lead. So why don't we think of a model which is a three-way arrangement between the wholesaler, the retailer, and the bank who is sponsoring the loan here on a real-time basis, so that the inventory movement is also checked. And how about developing or having an intelligent POS system where, in addition to, or which is integrated with the Khata book also, so that as the inventory moves out of the store, the wholesaler knows it real time, it's tracked, and probably the wholesaler, connects with you proactively on what needs to be refilled, along with the financing. Something similar to what you go to Chroma and the Bajaj FinServ guys are, waiting for you at the POS terminal. Something similar to that concept.
Yeah, Jumil, actually, thanks for the feedback, and this is exactly what we have thought, what you have suggested. See, one of the things that we plan to install a financial supply chain management, where we could not speak on the last slide, but where there'll be an auto pull of invoice, which will be accepted by the retailer, which will be, and through an invoice where they will be, validating the e-way bill and the other parameters, and once found okay, we will be directly disbursing. So this will ensure that the funds are disbursed for the purpose for they are disbursed. They cannot be using the something like an overdraft that they are used for any kind of purpose. So we will be actually partnering the dealers, the cash and carry B2B high-end retail stores for exactly this. And secondly, you see, this is a very kind of nascent market, and everybody's still kind of venturing into this. And one of the ways, since we mentioned this is going to be a highly data-driven strategy, and how do we get this data? Data will be provided through providing them, partnering with the SaaS platforms through this engagement platform. So, for example, order management tools or account management tools like a Khata book. So we will actually come to know their what are they ordering, what are the products they are ordering, which will help us in our credit evaluation to understand their nature. And also, obviously, what you have said is right. It will also help. Several companies have done this, and they are working on this. Amazon and earlier Asian Paint has done this, where the supplier exactly knows what product is going to fall short tomorrow.
Correct.
So this is going to be a predictive way. So we have planned all this, but we need to go step by step. But this is certainly we have planned it, and thanks for your feedback.
Sure. Thanks. Thanks, Shashank.
Yeah, thanks. Guys, thanks for your time. Please share your feedback. We'll pick up. Now we have extended times. We'll pick up again a few more questions. But request you again to please share your feedback. And those who share the feedback will share that entire deck with you guys. So any questions that I think Ramakrishna has asked question, but I think he has left out. But any other questions that guys?
I think there was somebody who had asked question on the chat.
That's why Ramakrishna Venkateshwar has asked this question, but I think it's not there. I can't see. Yeah.
If I may ask a question, is it okay?
Yeah, please, Prem, go ahead. Yeah.
So my question is this, right? If you look at the entire working capital needs of this particular sector or the space, it's actually being met currently by either the marketeers through their distributors or wholesalers, or through the hand loan system, right? The marketeers' cost of capital is global cost of capital, or is extremely low. And how would a lender to this sector be able to compete with that cost of capital and that value chain? Because it's in a multinational company like Levers, whose cost of capital is pretty low, right? And is that passing it on to the distributor, who in turn is passing it on to the retailer? Whereas, can you hear me?
Yeah.
Yes, you are audible.
So whereas if you look at the fintech, it probably is going to go into the market at a considerably higher interest rate. The other thing is that, are you talking about vanilla lending, or are you talking about buy now, pay later, or just products which are ad hoc in requirement and can be drawn down upon as and when needed? Because in most of these shops, the working capital support that they take from outside, from a financial services provider, is mostly a top up to their shortages. That's it. Yeah.
So I will take the question, and actually the second part of it, where you have asked that what kind of a product it is. It is not.
Just a moment. Before that, I think first part I can partially answer that.
Sure.
See, as you talk about HUL and other FMCG organizations, so the large part is that they bill to their super stockist or their stockist. So what exactly is happening between a distributor and a retailer, that is not their part. So if you talk about HUL or Britannia or Cadbury's or any other ITC, so they bill to their channel partner, which is primarily a distributor, or to their super stockist, that is basically called as a primary sale. And then super stockist or the distributor in that market, he bills to the retailer, that is known as secondary sale. And again, from retailer to consumer or to customer, that is basically a tertiary sale. This is how this typically FMCG system move. So in any way, these organizations, they itself are not concerned what exactly is happening between a retailer and a distributor, how much credit a distributor is giving to a particular retailer or not. So over to Partha.
Yeah, thanks, Adesh. So coming back to the product concept, as you have asked, and also it's a line of credit, and it is a constant on a constant revolving basis based on the client's conduct or behavior towards the loan. It is not a not a loan. It is a line of credit, and no, it is not BNPL. That is also a fact. Secondly, coming back to your other point, which is about the cost of capital. Now, I think the cost of capital is very much dependent on the fintech to determine based on the credit underwriting of that particular person. But since we are partnering the banks, we will be extremely competitive with the market. Like it is not an it will not be our cost of funding will not be high. That's the point I want to drive. So the fintech will be extremely competitive. Now you have to understand one more thing, which is very important point, is that this is a area which is untapped by the banks, to say the traditional banks, and that's why the fintechs are taking this space. And partnering with the banks will give us the benefit of cost of fund. And how much we charge to the Kirana stores is actually a result of what is the underwriting score of that Kirana store.
Yeah, thank you.
So Shashank, now we have extended this Raktim. So maybe it may be a basic doubt, and I'm asking you as well as other participants. At least my thought process was that by this time, between let's say the lending card or phone pay and these are already there in the market. And pardon me if I'm correct me if I'm wrong. So what is the USP of this will be, or are we saying those players are not there, and it is, or maybe you're just trying to, as part of this learning assessment, we have designed this session. So I thought that all those players are
maybe Sandeep or
there in the market, and which is there in the Hindi heartland as well as Kerala also. So
we got your point. I think so. I'll request Sandeep or Raghu or Partha or anybody would like to pick up that point. So what is going to be the USP and how you differentiate with other players?
And similarly, what is the USP of the, yeah, correct. What do you differentiate of this one? Because I'm assuming you are offering on cloud and all those things, because to be honest, yeah, pieces I've also heard from other players. So what is so great? Why I should onboard here, assuming I have a Kirana store?
Okay, so again, one more great question. So basically, our solution does not stop at lending, right? So while lending is one of the core solutions that we are trying to enable for the Kirana stores and distributor to participate on this network. Um, so it's we are going to bring a whole host of partner products and partner solutions as part of these platforms, right? So so this today will start off here, but we'll transition and move into something better. So today, like Kata Book started with the app, and they are able to give the bookkeeping digital format for the Kirana stores. So likewise, we can integrate with them, so everything becomes, let's say, seamless within one particular interface. And also at the same time, we transition into, let's say, like a neo banking segment. So let me give you that perspective as well, right? So if you go there, then see, everything becomes part of one single ecosystem for the retailer. And let's say tomorrow you want to enable an insurance product, or we want to enable some of his wealth related requirements, that obviously if his aspiration is to grow, he also needs to create some wealth on the other side, right? So how do we handle that part? So it kind of one interface, but it's like it's like it doesn't start with, I mean, it will obviously start with one, but it's not going to remain there. So it's going to transition slowly. And that's what we look at it. And that's what we think.
Okay, so if I
Anyway,
understand your thing, maybe you do the hand holding post whatever he got the loan, and maybe the hand holding and his further growth. So I'll tell you why I'm asking this question, because I was reading, and I'm not sure how much it is really true. Think of it, if Amazon Marketplace, and if suppose it is allowed, if they start offering loan, they already have the stickiness, they already have the this one, and the this one place providing everything. And I don't know whether in India it will be allowed or no, but just think Amazon as your competitor, Amazon Marketplace. So
absolutely.
then they will just but take away all the things. So what you will have, apart from, let's say, if Indian government does not allow, leave that part, but if they allow, then how you'll differentiate your things?
See, Raktim, actually, the competition will come from anywhere, right? So it obviously Amazon is one player that everyone is looking at. But if you look at the segment today, so the 75 to 78% is still offline. It's not, and then e-commerce from a 30 billion moving to about 200 $1 billion. And COVID has obviously accelerated some of those stuff. And we also read that 1 million Kirana stores have been, Amazon has enabled them to come online. So definitely that's a competition that we will face at some point. But as we move forward, we need to continuously evolve our USP. So we just can't offer just one simple lending. We need to offer a lot more. Let's say if we become an open bank and Amazon does not become one, obviously we stand to gain, right? In terms of looking at in terms of let's say what the retailer would get, right? So Amazon may be focusing on, let's say, the distribution side of it, but the financial side we can definitely look at a cross sell, upsell, a lot of opportunity. But yeah, I mean, definitely acknowledge your point that there will definitely be heavy competition as Amazon starts to grow.
Thanks.
Raktim, Raktim, just to add to your point, I mean, regulatory point and sheer economics, Amazon lending to their own network is monopolistic trade practices, right? Restrictive trade practices, so they will never get a license. I'm not talking as a politician, but as a regulatory issue on monopolistic trade practices, they won't do that. So that's ruled out. But that said, the amount of the retailers that are there on their network is also limited. The one that is outside the network is huge. So as a universe, there is humongous opportunity. And probably sometimes what happens is lending is a lending at the end of the day, right? It's how you facilitate and how do you actually onboard your initial set of Kirana store guys, and how do you do the hand holding, and the product evolves over a period of time over that.
So I'll just tell you, see,
just hold on. I know we can pick up. I can connect with the team and we can get into that detailed chat. We'll pick up one or two more questions. In just few minutes, we'll wind up the session. But meanwhile,
I just wanted to ask, see, somebody said that they will look at the aspiration aspect of the Kirana to get. Well, at least to me, that was a new point. And if I think Shilpa or somebody said, if you can elaborate, because that I have not till now heard. That what is the growth propensity of what the hungerness of the Kirana person. That can be one of the good thing in the India, because that we only know how India works.
No,
so
I think what we'll do that we'll just come back and if there is no questions, then we'll request Shilpa to pick it up. Meanwhile, since it's programs that these guys have designed it, an amazing work. Again, I'll just try to pick up Sandeep or Shilpa. Maybe you can just would like to talk about that, how your experience has been during this journey, and especially this building this fintech. Maybe you guys go ahead and start building that program product itself once you pass out in few weeks.
So I'll just go first. So I am actually from totally non-banking background, if I can say. And so when I came into this program, the way the entire thing was structured, so it is for anybody who wants to get the whole 360-degree view of how things happen. So it is not just if you want to start a fintech, know what your product want to do and go to market. It's not that simple. There are so many aspects that are involved around it, which I think this course systematically introduced that at various stages. So hence I think the learning, if I would have just gone and just studied something, but would have not been as much as what I've experienced here. And of course, I think the industry leaders was like the cherry on the cake. The kind of insights they always have brought to the table, or the things that they have. So there were many entrepreneurs who came up. They shared their views that what kind of struggles also they have faced, or what kind of things when they were thinking of the market, ki aage jaake kya hoga, how to do things. I think those all were the fantastic things. And this capstone project, especially because completely, like I can say I was just like that first frog in the pond, knowing GST data and how to do analysis with GST data. But this retail, which could be a data dark kind of scenario, you have to go and do something for them, what all things have to be thought of. So it was a completely immersive experience. And I think I should really thank all my project team members, because I would have like pestered them with questions day and night, and they have been like cooperative in answering each one of them. And like now that's the same thing they're doing right now as well. So I think it has been a very good experience, and I would definitely recommend whoever wants to learn fintech, not only just from a tech side, but that 360-degree view, they should definitely go for this executive program, or like Anand said, experience program.
Thank you, Shilpa. Guys, those who have not given the feedback, sincere request, if you can just give the feedback. Thanks for that. And maybe Shilpa, I interrupted Raktim boss, but you can just give your insight on the aspiration part, which you spoke about, that of the Kirana guys.
Yes. So when initially, when we had prepared this model and all, then we also ran it with some external experts. And when we were talking to them, these same questions that we are discussing now, that okay, market already has, the distributors are giving credit at such a low rate, and those are the things that also came up during the discussion. And that's when one point, the insight that came up was, see, Kirana, they already are kind of many Kiranas, I will say. I don't know if it is all, but Kiranas are already cash rich. Like they sell something, they get the money, and they are able to stock the next set of their items. But that is just if you are content with what you have. But the people who really want to do more, like there were a couple of examples that came up, that they want to either expand from becoming a normal store, they want to become like a complete superstore where everything is there within them, or they want to just increase their profitability so that they can serve or meet their other personal goals. So these were the kind of things that came up during our interaction with external leaders. So that's when they said that when you're doing underwriting, that kind of psychometric analysis also should be considered, so that these people are aspirational, so they will keep on need more funds as they go along, as compared to the ones who are happy and content with it, abhi aa raha hai, abhi maal ja raha hai, and they are happy. So hence, when we also got that feedback, we thought, okay, this is what we should be also considering if any underwriting model is to be done. That aspect, that are they, for what purpose they are looking? Is it just to meet their immediate working capital, or also growing in future? This aspect will have a play in the underwriting model, is what the insight was. Hope that answers the question.
Thanks, Shilpa. I think it has been amazing sessions. We ran almost 30 minutes beyond our stipulated time. So that's amazing. And the good work put in by the team. So with that, we'll be closing the sessions. Sreekant, anything that we need to add if you're missing out? Otherwise, then we'll say goodbye and come back again.
No, I think we have to cover pretty much everything. Thank you. Thanks all the wonderful participants. The way your projects have come out really well. Thank you so much.
Yeah, thank you very much.
Thank you, guys.
Thank you, everyone.
Thanks all. Thanks all.
Thank you. Thank you, everyone.
Yeah, thank you, everyone. Bye-bye.